Hi everyone, this is Mike Kramer of Mock Capital. Today is Tuesday, November 26th, and it's around 4:30 New York time. So tomorrow is going to be the big day for the economic data dump here in the U.S. We're going to be getting lots of important economic readings. Markets are closed on Thursday. Markets are half day on Friday. So this is going to be the highlight of the week. Obviously, trading volumes may not be what they normally are. So that's something to consider. But we are looking for GDP to come in tomorrow. These are going to be third quarter, second revisions. We're looking for numbers to basically remain unchanged. 2.8%, 3.7% for personal consumption, 1.8% for GDP price index, all basically in line with last month's expectations. Then we're going to move to PCE. That's going to be a big one. This is going to be a fresh data set for the month of October. We're looking for 0.2% month over month in line with last month, 2.3% on the year over year, up 0.2 from last month. Core, we're expected to remain at 0.3%, and year over year, core is expected to increase to 2.8% from 2.7%. Initial jobless claims also might get some attention. We're looking for 215,000, basically in line with last week's reading. We'll also be getting continuing claims. And then, of course, all the good data really starts coming next week. So that will be something to look forward to. And as we sort of turn to the markets, at least, we've obviously had a lot of really big movements in currencies, given now that we know who the Treasury Secretary is going to be here in the U.S. And I guess maybe people are feeling a little bit better that Trump picks someone that the market likes. So as a result, you've seen the dollar really very fluctuating, very much so against the euro. I think at the end of the day, it goes back to where the euro is and what we've talked about. Right now, the euro's obviously seen a tremendous amount of weakening since going back into September. And right now, I think, again, the euro just may have gotten to an oversold position. And basically, we saw that really big spike lower in the euro, that big round of weakening in the euro following those weak PMI readings last Friday. And since then, we've seen the euro bounce off of some of these oversold conditions. You can clearly make out that we broke below the lower Bollinger Band. Our RSI fell below 30. And since then, we've moved back up a little bit, back above the 104.90 region, which has been an important area in the past. You can see that matched the October of 23 lows. And at least at this point, we're looking at the 10-day exponential moving average serving as a level of resistance. In fact, we hit up right against it today, and that was where we reversed lower. The major point here is that the 10-day exponential moving average is certainly serving as a level of resistance. And as long as we continue to stay above that, I think this tells us the trend remains lower in the euro, but it doesn't mean we don't consolidate for a few more days around this level, especially with all that big data coming next week. When we look at the pound, we've seen similar with the pound also consolidating around this 125 area. Again, I think it's the same setup. We obviously got to a very important level of support. We got to a point where the pound was, basically oversold on that Friday morning, hitting the lower Bollinger Band, RSI below 30. But it looks like, again, we're below the 10-day exponential moving average. That's clearly serving as some sort of support. A break of this 125 area clearly sets up a bigger drop to around 123.5. Again, until we get above that 126.30 region, I think the trend favors further downside, maybe some sideways consolidation continuing through next week, with the potential upside maybe to around 127, if that, given where the 20-day moving average is as well. When we look at the yen, we can see that there's been some considerable amount of strengthening, and we've seen some pretty hot inflation data out of Japan. And it's starting to look like there may be a shot at Bank of Japan actually raising rates in the month of December. In fact, right now, market pricing is showing a 65% chance that you get a rate hike out of the BOJ in December, and an 90% chance of a rate hike by no later than January. So these odds are certainly shifting pretty quickly in favor of a potential rate hike coming out of the BOJ, potentially as soon as next month. And so what you're seeing is a turn here. It looks like we might be entering a new phase where we start seeing the yen begin to strengthen again. It makes sense from a fundamental standpoint, especially if the Fed and the ECB are going to still really be in a rate cutting cycle and the BOJ is still in a interest rate rising cycle. And so the key here, obviously, a break of 152.75. That sets up a potential move back down to below 150, maybe 149 and a quarter. You can clearly see the 10-day exponential moving average rolling over, the 20-day moving average getting close to rolling over. All indications short-term momentum is shifting. RSI also moving and rolling over as well. So I think you have to watch that big level. I think I also noticed in the same setup, really in the AUD JPY, for those of you that follow the Aussie dollar, again, you can clearly see here there was a major big level of support around this 99.5 level. That clearly appears to be broken. Again, you're also seeing short-term moving averages rolling over, momentum clearly rolling over. The next level of support probably doesn't come until roughly 98.09 or so, with a break of that really setting up a potential return all the way back to the mid-September lows around 94.30. And again, you're seeing the same thing currently in the euro, with the euro breaking below the euro yen breaking below some key support around 161. The potential here maybe to go back to this 158 region. So I think the yen is just overall in a strengthening trend. It doesn't mean it goes there every day, but I think that the trend and you can start to make the sense of, higher lows being formed. My guess would be is that we start seeing lower lows over time. Now that we also have a Treasury Secretary in place here in the U.S., you saw gold really had a really big sell-off yesterday, about a 3% move. Today, not much really happening. We're still below the 10-day exponential moving average, still below the 20-day exponential, the 20-day simple moving average. We were clearly oversold on gold. We clearly snapped back to around the 20-day. That level is the level that we're kind of now using as a resistance zone. So at this point, back below the 10-day exponential moving average, I think the same thing with gold. If the dollar is going to overall continue to strengthen, although it may not strengthen against the yen, if the dollar is more in a strengthening mode, if the Fed is in a rate cutting mode that's not going to be as aggressive, if the U.S. interest rate complex overall on the back of the curve continues to rise, I think that's going to make it a really rough environment for gold going forward. So I think that, again, that your resistance level on gold is probably somewhere around this 2,700 region, maybe around this 20-day moving average. As long as these moving averages continue to trend lower, I think you look for gold to move back to around 2,500 or so. Copper, also a very similar situation. Copper getting very close to taking out the lows we recently saw back here on November 14th. Again, stronger dollar, probably not going to do well for copper. This is a level of support that goes all the way back in time. So 405, obviously an important level. You can clearly see momentum shifting lower below all your short-term moving averages. This continues to suggest to me maybe we see copper heading to around 390 or so. When we move over to the DAX, you can see we tried to break out yesterday. Today we gave that back. Here's our exponential and simple 20-day moving averages. Again, we're at this point where we're going to want to see what sort of plays out here. I don't think the European markets are in exactly the same position as those of the U.S. So again, as long as we stay below 19,450, I think we look for further downside. A break below 18,860 sets up a much bigger move, potentially back to 18,275. It's when you look at the Stocks 50, it looks even weaker as we approach a major level of support at 47.40. If that were to break, it actually sets up a potential return over time to the August lows around 4,500 on the stocks. When we look at the FTSE, again, very volatile market. It looked like we were breaking down. We did hold support at 8,000, and now we're snapping back the other way. Again, the FTSE is just a very tricky market. It just seems to like to stay range bound. It's like we're in a really long-term consolidation pattern overall. It's almost as if we don't break support, we bounce higher. That would maybe suggest upside to around 83.50. If If not, maybe 81.80 is your next stop as of support if we were to see some sort of rebound. So is it possible we go 81.80 up to 83.50? It's possible over the next couple of weeks, but as long as we stay above 8,000, I think you look for upside. The NASDAQ not really performing all that great. We still have this big rising wedge pattern that doesn't really want to seem to budge. We still also have this cross throwover pattern that's still in effect. Today, the NASDAQ looks like it filled the gap from this period of time from November 14th. So right now, the NASDAQ is sort of inconclusive, I would say. I mean, typically when you see rising wedge patterns with throwovers, you expect it to break lower. And that's not what's happened so far. So we'll have to keep an eye on this. We fell below the 10-day exponential moving average, and now we moved back above it. So if we get the NASDAQ above 20,900, I think we're looking at 21,175, a retest of the highs. But again, the NASDAQ just doesn't, it's not leading like it used to. And that's a sign of a market that's probably getting a little bit more tired. And it could be a sign of a market that's reaching some sort of exhaustion or climax phase. The S&P 500 today barely squeaked out a new all-time high, 6,021. Here's a trend line that we can draw all the way back again to the basically the mid-August period. Would suggest that maybe the S&P can run higher to maybe 6,085. Your upper Bollinger Band's up there too. So you can clearly see that we don't really get much below the 20-day moving average. And when we do, we tend to get above it pretty quickly. So I would say your 20-day moving average just remains your support level over the near term with upside potential to maybe 6,100 or so. The Dow looks like it's actually hitting up against a resistance level here. So around 44,860. This is a tricky spot because it looks like you could maybe go a little higher with the Bollinger Band around 45,275. Again, the 20-day moving average has been really instrumental in supporting the Dow. So again, I would watch that as a level of support if we should start moving down an area that maybe we gravitate towards. Anyway, I hope you have a great rest of your week, and we'll see you next. Bye.